What's up, everybody? It's Cash Flow Overflow. Next is the channel Faith Trading and Wealth, giving you the latest and greatest updates on the financial markets. And we're gonna be taking a closer look at this trading strategy that I have for you guys today with ICHIMOKU. I know a lot of us that watch this channel, a lot of people that watch this channel, they are always interested in figuring out what style I trade, learning more about ICHIMOKU, how it moves and all that. So I'm going to talk about that today. And one of the strategies that I use personally, it's very simple, very straightforward, and it does not require too much. But other than that, you guys, what's up? I'm actually a little tired. I actually went to bed at 4:30 a.m. I was hanging out with at my parents' house, hanging out with my family, and then I came back home at like 4:30 a.m. and went to sleep. So don't mind me if I'm tired, if I yawn a lot. It's just I am exhausted a little bit, but I always have to spend a little bit of time with family, dedicate some time to YouTube and doing all sorts of other stuff outside of YouTube. So bear with me, you guys. But if you are watching, say what's up in the chat. I also organized rearranged my setup. I actually have my monitors stacked now. I used to have them side by side, but now I have them stacked, one stacked on top of the other. So I took care of that today. Even if I'm tired, I don't make excuses. I always try to get stuff done. But hey, that's what you're supposed to do in life. You're supposed to, even when you don't want to do something, even when you're tired, just keep on going anyway. So that's what's up. Let's see. What's up, Eric? How you doing? Appreciate you being here. Yeah, it's going to be different because now I have to look up at the screen. So this is interesting. Instead of throwing my head up, I'm going to just use my eyes to look up. So this is going to be different adjustment from what I'm accustomed to. But how you been, brother? I appreciate you joining the stream. Hope all is well with you. I hope all is well with everybody that's watching. It's going to be just a chill day. I'm going to look for some trading opportunities today, but I'm going to first teach you guys the strategy that I use. It's not the only strategy I use, but it's one of the stronger strategies trading ICHIMOKU. If you follow me on Instagram, you know that I posted this strategy up on Instagram as well. Let me see. I'm not going to go too far into it, but it was about like 2-3 days ago, maybe, about 2-3 days ago where I posted it. It's one of these strategies where you use just one of the ICHIMOKU's lines, one of the 5 lines to make a trade. I'm going to show you guys how to not perfect it, more likely how to be more accurate with it, because there's no such thing as perfecting a trading strategy. You trade your strategy and you win or lose regardless of what the market does. There's no such thing as perfecting a strategy. You can make it better, but perfecting, the market moves how it wants to move, so there's no such thing as perfecting in this market. However, you have better chances of winning trades when you stick to your strategy or your trading plan, so to speak. So I will be covering that as well. But let me go ahead and jump over to the charts as well, because I want to get right into it. I don't want to waste too much time. Let's see. So this is actually this trade that, well, this what you see on the screen right now. I'm gonna highlight some spots, but this was a trade that I gave my students. It was based off the hour time frame. Let me rewind back to show you what I was seeing exactly. It was actually right here. All right. So when I had called this trade for my students, I was telling everyone this is a different strategy, but I want to talk about this. I was telling them to watch this area, and I want to talk about this fractal because when you trading fractals, you want to box and zone it. So this whole area was where I was seeing price coming back to and looking to take the trade here, and then coming down to the 15-minute time frame, you see what was going on here at this fractal level, this zone here. So I saw that the market started rejecting here, and I was wondering if the market was going to continue a little bit to the upside, before jumping in. But what got my interest was this right here. So this is the strategy that I'm talking about, the Tenkan cross, where price breaks underneath the red line. So let me go ahead and take everything else off so we could really focus in on this strategy. So one thing, and this is crazy because a lot of people do not understand, there's so many ways you could trade Ichimoku. You could trade it with just the red line only. You could trade it with just the blue line only. You could trade it with just the cloud. You could trade it with everything all on the chart. But this is one way you could trade Ichimoku, is just trading the red line only, because this is actually showing you the strength and the direction of the trend. Whenever price is, this is what you could write down if you want to take notes. If price is below the red line, you're looking to short. If price is above the red line, you're looking to go long. But then you got to also gauge how strong is that breakout, and that's what I'm gonna talk about today a little bit. What's up, Sadiq? How you doing, brother? Appreciate you being on here. So the red line, also known as the Tenkan or TS line, whatever you want to call it, you could use it as a moving average, just across the once price breaks above or below, you're looking for a trade. What's up, Mike J? How you doing, brother? Appreciate you being here. Thank you for being here. I appreciate that a lot, man. But what you want to do, you want to see if price is going to break above or below. So let me show you some areas where you could have taken a short trade on this chart. So you could have taken a short trade here, and I'm just going to highlight this, and I'm going to get rid of this so we don't get too distracted. So right here, there's a trade opportunity right there once it broke beneath. Another opportunity to go shorts would have been here. And another opportunity to go short would have been here. So we're going to look at this and try to figure out why we would take this trade, or why wouldn't we take this trade. And then we could also look over here too. Price broke underneath at this point. Let's see. Actually, that was more so of a bounce, if anything. But anyway, I'm just going to highlight one more and go over it with you guys. So this one, I'm going to go over this one first, and I'm going to work my way from left to right. And I'm just going to tell you guys why you would want to take that trade and why you wouldn't want to take that trade just using this strategy. So here, this is this is where you would enter this trade short once price broke underneath. You could even enter it here. But what's going on in this area, you notice how price is not breaking above this point. So you want to also identify market structure too as well. You notice that price is staying flat here. We have resistance here, and price is not breaking above this level. So you want to enter in on the break of the Tenkan, which would be right here. So we're going to observe why this would have been a good entry. So when I use this, I don't just trade it just to break by itself. I like to trade momentum. So what indicators you could use to trade this? You could use the MACD. You could use a ultimate oscillator. You could use Williams %R. You could combine it with what else is there that you could use? The CVD. Me personally, I use the Williams %R and the CVD to see what direction most likely this trade will go. So when I look at this, let me show you guys this. And I'm giving you guys a free strategy, by the way, so y'all better enjoy it. Y'all better take advantage of this, like, for real. But this is one of the simplest strategies that could help you make some money. You said been trying the Williams. Yeah, how you liking the Williams %R? It's very good. The Williams %R is very good. It shows you momentum on the chart. So this is what I'm seeing here. You see how the market is staying flat at this level, and this is saying here. We're gonna just break it down. All right. So here, this is showing you that buyers are trying to come in this market, right? So as you're seeing on the chart here, this has been going up. Buyers are trying to come in and push this market up. You see on this bar here how it turned purple. But notice on this bar, and I'm going to clone this line real quick. On this bar here in particular, this was saying that buyers came in the market, and you see that it broke above, well, it broke above here, but you see that it's saying that a lot of buying volume came in here, or a little bit of more buying pressure. So this should have been breaking this level. But what ended up happening, the next bar on the CVD, you see how the market got absorbed. Buyers got absorbed here. They couldn't break this high or this resistance here. So what ended up happening, the market continued to stay flat. All right. And notice how sellers starting to slowly come into the market. All right. So this is one way to identify how to get in. So once the market had broke underneath the Tenkan, I would have started looking for a trade. Like right here, you could have looked for a trade. What you could have done, you actually could have entered on even right here. But if you did that, you would set your stop loss and your entry like this. Right when the candle broke underneath, the next candle, you're going to put a entry right underneath there. Stop loss slightly above this level. And then you will look for your targets however you want to look for your targets. And I'll even tell you how to exit this, because you could use this strategy for scalping. You could use it for long-term trades, or you could just, or intraday trading, however you want to use it. But this is how you would have entered right here. You would have entered on either this candle, and I'm going to clone this too, because you could have entered in multiple areas, but I'm going to show you these two areas. You could have entered here, and you could have put your entry right underneath that wick. Let the market enter you into the market. Put your stop loss slightly above this level, because you know that the market's having a hard time breaking above here. And if you did, you would have never hit your stop loss. And then on this candle, you see the next five, I think the next 5-4 candles. This is the 15-minute time frame. The next 5-4 candles, you're in profit. And so you would have caught this market down. So you had another entry right here. So you could have put that entry. Let me show you. Let me do this as well. I'm going to put a line here for entry 1. I'm going to make it green for entry. So that could have been one entry right there. And this could have been another entry right underneath this candle. So let me take this off. You had two entries based off trading this red line by itself, which is crazy. Now let's see why this one wouldn't have been as strong as this one. All right. So there's a difference in telling which one's going to be a stronger trade to the downside, what's going to be more momentum versus another, which is why I added William %R. So here you see the William %R for this candle. Even though this line right here on this bar said we're going to go short, look where the William %R is. It's saying it's not a strong breakout right here versus down here. This is saying that this is a stronger breakout right in this area. All right. So let's compare the two. Let me do that. So when we look at the chart, you see, oops, I messed up. I meant to put it right here. So right there, even still, same thing. It's showing you that it's still on this candle. It wasn't strong like this one. This one was showing you that there's momentum. This one was showing you that it was coming down, but it's not strong with momentum. So that's why this one, you could have still entered here, but you would have probably been a little worried because there was no momentum with your trade, as opposed to right here. You're trading the momentum there. And look, right when you enter in on this, look, the market, you're in profit, and look what the market did. Boom, came down. So next, look what happened here. Let's look at it again. On the next one, let's go to this one. Look what happened here. You have momentum here. It's showing you, oops, let me do this. It's showing you right there that this is down, and it's showing you that there's momentum with this trade. So when you enter in on this bar, you're trading the momentum of the market. You're trading with the direction, and not just the direction. You're trading with the people that are moving the market. So right there could have been your entry right underneath this candle. Stop loss could have been above or halfway of this candle. And look, right into profit. Now, how would you exit this market? Now you could exit off of price action, or you could exit when the price breaks back above the red line. So you would have exited here. You would have made that much profit here, honestly, but you still would have made something. And this is a 15-minute time frame too. So from there to there, let's see, boom. You made about 116 points in the market, which is not bad. So that's not a bad move. But look here. Let me show you here. And this is why you have, when you trade this strategy, you have to make sure you understand your levels too. All right. So if we look to our left, let's look to our left. Let's put a line right here. Let's put a line right here. All right. So if we look to our left, right, we know we have some support here, right? Because look, and this was also resistance at one point as well. But you know, if you look at this point here, in this area here, over here it played as resistance. Over here it played as support. So you have to take that into consideration. Is this market going to hold at this level? And this is also a fractal level on a higher time frame anyway. So if we go back to this, there was a Tenkan break here, right? And this is why you even if you trade your strategy, not all strategies are 100%. I'm going to show you why this, even though if it played exactly how you wanted it to, let me show you why this failed. Because this was a good one, but it didn't work out. But let's look at it. You had selling pressure with the CVD, and then you also had William R momentum as well. But look what happened. It did not play out that way because you're trading right into support. This was resistance turned into support now, because back here we know it was resistance at one point. Then it broke. You see how it broke? Came back, retested. And once it retested, it established itself as support. So you can't always take these breakouts. But let me show you another reason why this failed too. And I want to know if y'all see why this trade failed here, why this wasn't a good breakout. Because if you noticed, this is crazy, because if you noticed here, look what happened. This is why you got to take your time when you look at charts, because look what's happening with the price. Price is coming down, right? But look what's happening here. This is moving up. Oops. This is moving up. Even though it showed that there's a lot of selling pressure, this overall was still moving up. Look at that. Even though it's slightly, it still moved up overall. So that was divergence right there. That's why this was a losing trade. That's why you have to pay attention to every detail, because even the smallest details could change the whole trade. Divergence could change this whole aspect of the market. This was going up. This was coming down. Divergence, you see the market went up. Crazy, right? That's why you have to wait. Oh, I'm getting some messages right now. But this is why you have to watch these breaks. This is one way you could trade ICHIMOKU, you guys. So here's another one. Here was a bullish break, right? I'm going to show you the bullish trade. So this would have been your entry. But let's see if there was momentum with your entry. You see that there's buying volume. You know, we already established that there was buyers coming into the market. Look at the buyers coming in. We are also already established that there was bullish divergence. And you see this is coming up now. Now, if you look here, this was showing that momentum was in the market. So you could have put an entry, depending on where your entry was or where your stop loss was for this trade, you could have won this trade. This could have been a loss or it could have been a win, depending on your stop loss. If you put your entry right above this level and stop loss, let's say your stop loss was here, you could have probably won this trade. Now, if you put your stop loss right underneath that candle, you would have definitely got knocked out here. But that's fine. That's how the market is. So if you put it down a little bit here, you would have won that trade. So that's why I say, depending on your stop loss, you could have won or lost this trade. Another entry for a buy signal here. Move it over. Right there. Market broke above the red line right here. And if you see, there's buyers coming in this market right here. See how this is coming up? Buyers are coming into this market. Now, if we look again, why this would have been a good trade right here. Boom, right there. You got a small buy volume bar right there. And then not only that, you have momentum on your side for that trade. Momentum right there. You see the Williams percent R broke above the -20 level. And this indicator is actually backwards. Is this top is supposed to be -20 and -80 is supposed to be on bottom. The original Williams percent R is actually 80 on bottom and -20 on top. So this one's actually backwards. But this, you still trade it the same way as you would trade it on a as if it was regular. But look here. Once it broke above the red line or Tenkan, you see that the trade would have been a good trade. Boom. And you could do this all day, honestly. You see it just breaks back above and below on the red line. So look here. This was the trade that I gave my students, but I was telling them to look to go short here. Actually, it was actually up here that I told them to look to go short. Once price broke underneath the red line here, this was our entry. You had volume decrease dramatically right here. It went from high to low real quick, so sellers are coming in. Not only that, you got sell pressure or momentum coming in with the Williams percent R. So this would have been your trade right on this candle. Once this candle closed, entry right underneath, stop loss up here, ride the market down. You could have put the stop loss up here, but if you want to be safe, you may want to put it a little tighter. But that's up to you. Stop loss is based off how your preference and what you're willing to risk anyway. So when you look at this, let's play it. You see how this market played. Let's speed it up a little bit. You see what happened with this market. It came down. So this was a big trade here. Really big trade. And it ended up moving all the way down to the target point that I had set in the student chat. Let's see. And this was 7% in crypto on Bitcoin on a 15-minute time frame. And if you're trading on a Forex broker, this is 1,487 pips of a market move. Let's say you missed that trade opportunity. All right. Let's just say you missed it because you can't catch every single trade, right? So let's say you missed this one up here. Cool. We're going to find another one. So what we're going to do, we're going to look for another breakout. Okay, we got another breakout right here. Let's see how this one moved. Will we have taken this trade? We got sell pressure coming in right there on that volume bar. And we also got momentum with the Williams percent R. Boom, right there. Boom, that's another trade. That's another winner. It would have never hit your stop. Well, let's see. It would have probably spiked you out, right? No, actually, you would have been safe right here. Even if it spiked up, you would have been safe. So, yeah, you would have still won this trade. It would have been in this market. Now, are you mentally strong to hold it? That's the question. Now, here's another one. Here's another opportunity. Let's say if we had taken this one right here. Let's go right there. Another breakout. Can we take this one? Or would we have taken this one? Move that over. We had selling pressure. It wasn't that strong right here from what it's saying. And then this one came down, but it's not underneath -80. So this would have been a trade that you may pass out on. You might not take that trade. But look what happened. If you did take it, if you were confident to take it, look what happened. It still played out in your favor. So you have to understand, do you want a higher probability or you want to go for the trade just because you want to trade? I trade with higher probability. This was not a high probability setup. This would have been, okay, maybe I would have considered it, but I would have kept my stop loss tight. And then if you held it too long, this candle probably would have spiked you out way over here. But you would have made some profit here before the market returned back to the upside for a retrace and then, held itself up here, then came down. Let's look for at another one. You had another one right there. Yeah, I actually had like two in this area too. You had one right there. And you also had one right here when price broke back underneath here. So let's see, if you put it here, volume's coming down on this bar right there. And then look, you had momentum on your side right there. So take that trade. You made a little bit of profit. Now, depending on your stop loss, you would have probably got knocked out here, right here on this candle, like I was saying. But still, if you saw this rejection candle, and this is trading it with price action now. You're not trading momentum. Because like I said, you could trade this differently. So we have this gigantic rejection right here at this level. We know that this is resistance right here. And we also have price action candle right here, the shooting star. So we know that we could have put an entry right underneath this candle. You could either put it at the wick or right underneath the body of the bar. So once it broke underneath here, boom, profit. All right. And you did, the thing is here, you could have still taken this trade. You did have momentum with Williams %R, but you're trading the price action. So this would have still been a good trade to take, in my opinion. Here's another one, because we're looking to go short because we know that the market's bearish based off the higher time frame. So right here, let's see. Nope, not that one. Right here. You could actually enter it here anyway because it was bearish engulfing, but since it wasn't a break, we're not going to look at it. Here's another one. And if this is making sense to you guys, let me know in the chat box if this is making sense. You said, Mike J, you said looking like a short is forming now. Yeah, I'll check it out in a second. Yeah, I'll check it out in a second just to see. So right here, look at this. We had a break right underneath our Tenkan, right? So let's see. Let's see. Boom. Right there. Oh, I'm taking that trade for one reason. So you see the bar right here, the previous bar on the CVD was purple, and then you see this gigantic bearish bar come in. I'm taking that trade. Even though Williams %R did not give me a signal here to go that the momentum was strong, I would have still taken this trade right there. Right when the candle closed, I would have entered my trade, put stop loss right above, and then it moved sideways, and then boom, I would have caught all of this. So you would have shorted from this point all the way down, and you would have taken profit right here on this candle. So I'm gonna turn this blue to show you where you would have taken your profit. Let's see, boom. Let's see, boom, right there. You would have closed the trade out right here. The reason why you would have closed the trade out right here because the market broke back above the red line. So you're staying in this trade until it breaks back above the red line. All right, and you would have made how much profit? About right there, you would have made 540 points in the market. That's for this, depending on your leverage. That's a lot of points in the market, and based off a forex broker, this would have been 2.64%. That's quite a bit for a forex broker, depending on what leverage and how much you're risking too. But that's a big move for a 15-minute time frame. And you could have still gotten another trade right over here because it broke back underneath the red line. So, yeah, this was a good trade. This was a really good trade. This is a simple strategy. It's not crazy. It's very simple. It does not take a lot to know. You don't need to know a lot. You just need to understand the overall direction of the market. And since this is a 15-minute time frame, you use the higher time frame, because if we look here, this is what we were trading here all the way down. And you see, if you were trading it on the hour time frame, you could have got in some positions on the hour too. But since we're trading the 15, trading it like this. So yeah, this is not a difficult strategy. This is one of those strategies that I think everybody could use. I don't. It works in all markets, whether it's forex, stocks, crypto. It works all the same. Mike J, you said break and retest was beautiful on that. Oh yeah, it was gorgeous on that. It was gorgeous, and you could even got a trade in right here. Not even on the break, but the rejection of this red line is a bounce off that red line, and you see, boom, momentum came in right here on this candle anyway. Bearish engulfing candle right there. This is why you got to understand price action too. This not a breaking strategy, but this was a bounce right there. And then boom, you have momentum right there. Straight into profit as soon as you entered on that candle. So this is one of my little trading strategies that I use. It's simple. Looking at the current market now, we actually might get a break here. We might get a break right there. So we got 10 minutes for that candle to close. I'm not sure what's going to happen here based off just looking at it. Let me see if there's any divergence. There is some divergence here. You see this right now. Oops. I don't know why I always do that for some reason. So yeah, you see some divergence right here coming into the market. Like, this is obvious. So we have some divergence on Bitcoin happening right now. That's bearish divergence. So what we want to see momentum on the 1% R, and then we want to see this start to, actually we already see bears coming into the market. This is telling us that anyway. But what you want to see here, you want to see it start to flip blue as well to really confirm it. But either way, there's so many ways you could use this strategy. If this strategy was helpful to you guys, drop some fire emojis in the chat. If you want to test this for yourself, this is actually one of the main things that I use in my strategies. It's very simple, very simple. You could also do it with the blue line as well. It's actually the same, really. But I use the blue line more for bounces than breaks. I don't really trade the blue line for breaks. I do, you can, but like here you see the market broke below the blue line here. You could have taken a trade there. So you could use this so many ways, you guys. Like, ICHIMOKU is very diverse in it's what you could do with it. Very diverse. But yeah, that's how I trade it. I just want to show you guys that strategy. The market here is also, and this is why I like to use all the components, because right here it's telling me that the market may reverse here because the blue line's going flat. Whenever you see the blue line go flat, it's saying that the market could potentially reverse. And the reason why we do see some bearish divergence coming in, we see on the Williams percent R is trying to come down as well. We don't have full confirmation because right here the red line has not been broken yet, but it is something that we do and should be mindful for right here. So I really hope you guys enjoyed this strategy. It's very simple. It's not hard at all. It's really not. And this will help you make a lot more money in trading. And you could use it on any time frame. I prefer higher time frames, but you can use it on smaller time frames as well. Let me show you an example on like a 1 hour chart. Let's go back in time. And you want to find a trending market that has a potential of trending, by the way. So let me show you like here. So all this area is good for looking long. Okay. Midwest, how you doing, brother? Thanks. You said nice. Thanks for a lesson. Yeah, appreciate you coming through for the lesson. So let's say if we were looking for a long, right? Let's see if this would have been a good trade right here. And y'all could back test this idea anyway for yourselves. I'm not telling you to trade this because I think it'll benefit you guys. And I want you guys to test it out for yourselves. You don't even have to use this for, trading, like trading live. You could practice this on a demo and see if it works for you. You said, I am Juan Cruz. Hey, what's up, man? How you doing? It's been a minute. What's going on, champs? Good to hear from you, man. Thanks for joining the stream. I appreciate that. But like right here, looking at this, you want to look and see what's going on with this market. So like right there, let's see, boom. Let's put that line right there. Look what's happening. This is literally telling you that buyers are coming into the market. This is what this indicator is used for. But you got to make sure you read it properly because there's some things that's not always accurate. And I'll get into that another time, but I just want to cover what I'm talking about today. But you see here, buyers are coming into the market, right? This was buying a buying bar coming in, or buying increase bar, right? So right here, let's look at the William percent R. It gave you a signal for momentum right there. It broke above the negative 20. Once it broke above that negative 20, buyers came in. So this is how you would set that trade up. Put your entry slightly above that candle. Let the market trigger you, or you could use market execution, whatever you feel comfortable with. I'm not going to tell you what to do. It's your money. But look, you put your entry right above that candle, and then stop loss either underneath that candle or at the low. So you could put it even at this fractal low. So that would have been your stop loss underneath here. You see it never hit your stop loss. We zoom out. Look what happened. You caught this whole move up. That's 2,000 pips right there. 10% on that trade. This is the simplest. This is why I don't care what no one says. I think Ichimoku is the hands down the best indicator in all of trading because it's literally shows you and tells you the trend. This red line keeps you in the trade. This is why I say Ichimoku is the best, because you have to understand every component, how it works by itself. You have to understand how it works in conjunction with all the other components, because that's how you stay in trades. So right here, let's combine these two now. So here, the blue line acts as support as well. So whenever price breaks below, you may think the market may reverse here, right? You could have actually entered a short here, or thought about entering short, but we never had a bearish crossover. We had a bullish crossover, right? So what ended up happening here, the market stabilized right here. And you could also done this too. Let me stop this. Let me do this. Let's turn that to a darker line. So you see the market stabilized here, right? And if you know the Ichimoku wave theory, and I'm going to teach y'all that too one day, but just not today. I would have probably stayed in this trade only because I know we got an S wave right there. So I'm going to look for another trading position right here anyway. That's just me, because the more you know, the better. But anyway, point is, what I'm trying to say, you have to understand how to use all these in conjunction with one another, because the blue line, you may have exited your trade here if you didn't know the wave theory. But once you understood that the market was going to hold here, you see why we had indecision. Then you had a bullish candle, a slightly bullish candle. Don't tell me if I'm wrong, you guys. I'm pretty sure that this is a evening star formation right here. So you could actually enter the trade right here. Boom. Caught the trade actually from the very bottom, taking that all the way up. Now, if you did it traded like that, you could have waited till the market broke back above the red line. Wait till there was momentum with your trade. So right here, let's move this. Let's move this out the way. It was right there. Once you see that it broke above here, you got momentum on your side, so you might as well jump in this trade. Make sure you use good risk management, because risk management will save you from losing your account. Have good risk management here. Put your entries slightly above the body of the candle. stop loss underneath the blue line, ride this trade up. You caught this whole market, and this is an hour time frame too. As long as the price, and this, let me tell you why Ichimoku is the best. Like I said, I don't care. I think Ichimoku is the best. Ichimoku is telling you stay in this trade because you haven't broke underneath the blue line. Yes, maybe you might get scared here because market did break below the red line, but if the market's gonna truly reverse, like really truly reverse, it's gonna break below the blue line. Now, someone had asked, John, you said, bro, how did you determine those horizontal lines? Which ones? Because I got so many horizontal lines on the chart. Be a little bit more specific. But if you're looking, once we broke here, the market kept on continuing up. But look, it never broke back below the blue line. As long as you're still above the blue line, you're in this trade. Now, once we broke back, see, and that's the thing. You could use it. Once it breaks below the red line, you could exit. Once it breaks below the blue line, you could exit. Once they cross one another, you could exit. There's so many ways you could use Ichimoku. It comes down to your preference anyway. Me, I trade it until I say, okay, I see that there's some divergence. I see that there's weakness in the market. I'm getting out. That's how I get out of the market. I don't just get out because I see this got broken. That's not enough for me to get out of the market. So I look for certain things like, now, had we broke here, then I would have definitely been out. I'd be like, oh, this market's reversing. But and then this is why you got to have all the components on. Let me show you. Because look here, the cloud is going to act as a the third level of support. So you got the red line acting as support, the blue line acting as support, and then the cloud. So let's take off the red and the blue line. Right? So you see how the market came right down to this level here. You're doing a Kumo bounce, the cloud bounce, whatever is Japanese Kumo, that's what it means. So you're doing a Kumo bounce here. Take that trade up. Now, is there momentum with that bounce? No, but there is price action there. So you could have a very tight stop loss here and then take that trade. So that's why I always have all the components on my chart. Yes, you could trade the red line by itself. You could trade the blue line by itself. You could trade the cloud by itself. But I prefer trading all the lines together because it gives me a better indication on what's going to happen. Because if you were trading this naked, I guarantee you most people that trade naked charts, if they don't know how to read structure, oops, let me get rid of that. Most people probably would have start getting out of their bullish trade right here, because they saw that strong bearish engulfing candle, and this is why you got to understand market structure. They saw this strong bearish engulfing candle, but they didn't wait for the next candle to show indecision. Now, I probably would have been a little more confident with this because look, I know that I have support here. Right? So I know since I have cloud support here, I'm thinking that this market's going to hold, look for another entry, boom. Look what happened to this market. Bada boom, bada bing, bam. Trade went up. So you have to understand you could mix it with different styles as well. Let's say we were using multiple time frame analysis here, right? Let's go back to... because I know how this thing be sometimes, trading view. So let's go back down to the 50. So I'm going to mark this yellow area and go to the 15-minute time frame here to see what's going on here. So this was this area, right? So if we look at this, you see that this was the flat area or the cloud area on the hour time frame. So you see on the 15-minute time frame, we're flat here. And you see on the 15-minute time frame, buyers are coming in right at this level. Right there. Let me stretch this out so y'all can see it. So at this level, just to make it more clear, So between this red line and this red line, buyers were coming into the market while the market was flat. Boom, pop. The market popped up. So you could have entered in down here. So boom. And you could have rode this market from down in here all the way up here. If you really have the guts to hold the trade, that is. That's the thing. You have to have the guts to hold trades too. So, but if you're entering on the 15-minute time frame, you're basing it off the hour time frame anyway. So you're gonna most likely hold this trade because the price stayed above the cloud anyway. So this would keep you in that trade. All right. I'm just giving y'all tricks and tips because this market, you just got to take your time when you read these charts. Don't make this complicated. The moment you start making your trades complicated, trading complicated, is when you start to lose interest in trading and you start to second guess what you know. Because I've been there. There's sometimes where I would look at the chart. I take maybe like three losses back to back, and I'm like, man, what am I doing wrong? And it's because I'm missing one key detail that could have changed the whole dynamic of the trade. And that's why, you got to really take your time. Have good risk management. Take your time. Believe in the strategy that you know. Back test it. You could, make sure you understand why you're taking the trade. Don't just take the trade because you want to. Take the trade because you understand your strategy and don't deviate from your strategy. Whether you win or lose, you're sticking to your guns. But make sure you understand the reason why you're taking your trade before you take it. If you don't know why you're taking the trade, if you can't come up with a reason why you're taking the trade, most likely you're just trading and gambling your money away. You have to have reasoning why you're taking that trade. Everything in life has to have purpose. Just like in trading, there has to be a purpose why you're taking that trade. There has to be criteria why you're doing that. So that's why I like, I do like trading. It makes you think. It's like chess. And that's why I enjoy the game chess as well. But it's really a chess game on these charts. It's just got to make sure you're reading everything accurately. So, like I said, this is not a hard strategy. I think people could benefit from this. Looking at the current market, let's go back. I think it was the 15-minute. So we just broke beneath the red line here, but we haven't closed completely yet because this could still spike above it. Once this closes in 9 minutes, we might be able to look for a short here. There's no momentum though, but there is a possibility that this trade could come down. Basing it on the hour time frame, let's go one more chart higher. Let's go to the 4 hour. Actually, this actually might be a good trade to take for a short. Right now, actually. Do I want this on here? No. Actually, I'll keep this. Give me a second, you guys. I want to make sure something. I want to take that off. I'm going to take this off as well. Okay, so the reason why I'm looking for a short here, I need to get rid of these lines because I got so many lines here. I don't like to keep my charts cluttered because once I get too much clutter, I get annoyed and I don't want to look at my chart. But let me see. So one big thing here, we're actually in a gigantic triangle right now from what it's looking like. Let me break back so y'all can see this. So in ICHIMOKU, this is called a P wave. If y'all take my courses on YouTube, it's you could get the membership and be a member of the channel and get the course. It's on YouTube. But if you look here, this is the P wave. I'm looking to see if we're gonna have a breakout here. Now putting everything back on, the reason why I'm looking to go short here, for one, well, actually really two reasons. One, we're underneath the cloud, and two, we're already rejecting at the blue line. So when you start rejecting at the Kijun, this is actually a strong level of resistance. Most Ichimoku traders that I know, that are Japanese Ichimoku traders that I know, excuse me, they like to take their trade at the blue line because that's where you have less risk, higher reward. So you could definitely take a trade there. Once this candle closes on the 4 hour anyway. If you want to wait that long, it's gonna be 2 hours and 7 minutes. But if we go down to the hour, let's do this. I want to show y'all a little trick with ICHIMOKU real quick. Right there. So you see where this blue line's at? So I'm gonna put a line right there. Right? I'm gonna do this. I want to show y'all this little trick. Let me type this in too. Kijun. Actually, let me do this. All right. 4 hour Kijun. All right. So if I go down to the hour time frame, we know that this is our 4 hour Kijun right here. So we know this is resistance right here. Let me read the comments. I'm behind. You said some funky price action today off. Let's see, off a terrible inflation report. Yeah, that inflation report's some nonsense. Seems like a trap looking for Bitcoin to roll over at the local golden pocket at 140 to 246 with some bearish divergence to confirm my thoughts. Yeah, there's already bearish divergence actually right now. Market that could actually drop right now. We're already seeing rejection. Now you have rejection, and 3 rejections here. So you could get in for a short very soon if it gives you that opportunity. Mike J, you said where would you put stop loss? For where would I put stop loss based off? Let me see, which one? Based off the hour time frame analysis, or which one? I wish I read that before. Wish you had said something sooner so I could have identified what you were saying. But look here. You see how this is the 4 hour Kijun right here? You see how sellers are coming into the market right now? We have that bearish divergence. This is the 4 hour Kijun resistance right here. If price breaks above, so you're talking about right here. Okay. So if we're going to take a short here, I will put a short slightly above. I will put a stop loss slightly above this level, just so it's not too far. Oh, on the hour. Okay, let me go back to it. Let me go back. And are you saying at this current level that I'm looking at, like right here? Like right in here? Is that what you're asking, Mike? Just to make sure that we're on the same page. First of all, I would want to wait for this candle to close anyway, because this has 4 minutes before it closes. So I don't want to jump in too quick. Let's see. I just want to make sure we're on the same page, brother. Okay, so here. So first of all, the first thing I want to see is I want to see this candle close, which will be in the next 3 minutes anyway. So once I see that candle close, if I was just purely trading the 1 hour time frame, I will put it above. I will put stop loss above that high, because you notice here, look, the market is making, and actually let me make it a little bit more visible for you so it'll make a lot more sense. So if we go from this high here, right, to this body of this candle, this is a zone. This is a resistance zone right there. And if we go back a little further, let's see. This is actually a fractal level over here. So yeah, we could actually use that too. But you will put it right above this zone. You'll put the stop loss right above that zone. Entry right underneath this candle once it closes, but you have to confirm it to be short first. Let me take off my cheat codes too. So right there, boom. This will be my entry, stop loss and everything. That's how it would look. So once that candle closes, I'm in. And then if we want to get in on a smaller time frame, if you feel that's the case, if you want to do that, You get in on this break right here. There's no momentum, but we're still showing a lot of signs that are bearish right now. But like I said, you would still want to wait for this candle to close to make sure and confirm. So depending on how you want to trade it, there's different ways you could trade it. I personally would put my entry underneath the wick. Stop loss above the high. Entry below the wick here, and then I'm in the trade. Let the market trigger you in. Don't enter the market by yourself. Let the market trigger you in here. All right, that's the best way to do it if you're gonna enter a trade like this. And if I put on my candle cheat codes, the market's showing a little bit of a slowing down, but I want to see this candle turn gray. If this candle turns gray, I'll be more tempted to look to go short here. But since it's not showing gray, this might be a trap right here. So that's why I don't want to jump in yet. If you look back on the 15, it's struggling to break that red line right now. So that's why I said, I don't know yet. I will probably wait for another hour or two. Maybe one more hour before you get like a better confirmation. But right now, if you're trading the 2-hour time frame, you look at it like how I was saying right here. You would go short underneath this candle. And yeah, we have a big old fractal level here too anyway. So this is going to be interesting. Let me go back to that that 1 hour. If I make this visible on the 2-hour chart, you're going to see that it lines up with that fractal right there. See that? You could see when you start playing with fractals, you could just look at see a fractal level without having to go to that time frame. I just know by instinct now what's a fractal level and what's not, because once you start playing with the market, you start to see it better, and that's what you see. I don't know. It's weird. It's like your brain just knows what it's looking for. But anyway, the candle just closed. Let me look at the 15. It closed weak, so I don't like that. But the blue line is flat, so I am curious how this is going to play out. I do like that bearish divergence. I want to see a bearish candle close underneath this red line, and that's when I would probably look to enter. Now, if you want to be aggressive right now, if you want to be an aggressive trader right now, you could enter the market now if you want to. I prefer you don't, though. I prefer you play it safe. Put your entry under this wick. What price would that be? The price would be 12,000. I said 12,000. 20,212. Yes, so this will be your entry here. Stop loss will be above this wick. Keep it tight. Let the market trigger you in, and you ride this market wherever it goes, or if it knocks you out of the market. Now, if you look at what's happening currently, let me take off my candles. You see that this next candle is turning blue. So this might actually start to move to the downside actually right now. And if you come to the 15-minute, you see that we're breaking that red line currently. I just don't see the momentum yet. But once we see that, that's when I would enter. So yeah, this is I think this might be a good trade to go short right now. If you want to be aggressive, you might want to jump in now. If you want to wait for this 15 to close underneath this red line, and we'll see what happens. But everybody, is it making sense? Is this strategy making sense? Has what I said today to you guys made sense? Okay, Mike said yes. I appreciate you giving me feedback. If you like this type of live stream where I teach you guys how to trade, read charts with ICHIMOKU, let me know in the chat if this interests you. If you like this and you want to see more of this, definitely subscribe. I do live trading as well. So anybody that watches, y'all know that we do live trading, and we'll take trades. Honestly, this is a trading opportunity right here, so we might take that depending on how this candle closes. General, you said this was informative, man. Thank you. Of course, I appreciate you even giving me time. John said yes. Thank you for your feedback, you guys. I appreciate you guys giving me feedback. Midwest said yes, great, perfect. Okay, yeah, I'll do more videos like this then, or more live streams like this. Much more. Okay, bet I'll do much more of these. Yeah, I will definitely do more of these because I do think that it's beneficial to learn how to trade and read how to read charts and learn this style of trade. I think it'll help a lot of people out. He said, in this small time frame with this strategy, are you looking to take profit? Blue line. Yeah, this would actually be the first level where you would consider taking profit right here at this blue line. So if I was to take a short right now, this is how I would set it up. My short would be here, stop loss somewhere here. First target number one would be this blue line. And if you are looking at it like this is a fractal level. So the market could do something like this based off the 15. It could come down, come to this level and bounce up, which will give you an N wave. So yes, that's what would happen. Mike, you said, I have noticed that people get more viewers when they live trade. Maybe try and stream more when looking to trade. Of course, that yeah, I always try to do that. I like to teach as well, but I think you're right when it comes to live trading. It's just live trading is so boring. Have you ever been on a live trading stream before? They be so boring, and I'm not saying like the people are boring. It's just sitting in front of a chart for like 2-3 hours, and just because most of the people that I see, if I do watch a live stream, they don't talk. They just sit there quiet and they'll mumble every now and again, and then they'll go back to analyzing the chart. You know what I mean? So I don't want to be boring if I'm gonna do live trading, you know, because I don't have like so much stuff I want to talk about unless something just comes to mind. But live trading sessions are boring. Like they just talk, be quiet for like 30 minutes, and then they talk again for like another 5 minutes. It's so weird. That's why I like conversation. Like that's why I like engaging with the chat because I'm like, I don't think I'm that interesting of a person. I really don't. So for me to do a live trading session, when I see a trade, I get on live and say, "Hey guys, I see a trade. We're gonna take the trade." Da 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 da. You're like anybody that has watched my live streams know that when I call out a trade, I say, "Hey," and I'll put it in the Discord for the students, and y'all could take the trade yourselves, and boom, make money together. Boom, y'all go on y'all's merry way. So it is what it is, but it's the small talk that's just like, that's why I said I would have to come up with how to do it better or how to be more entertaining because most traders are boring, honestly, and I don't think I'm that entertaining as well. So I'm putting myself in that category. Let's see, Mr. Q, what's up? How you doing? You said the ones I see don't live trade. They go through a bunch of coins or stocks or commodities or whatever, and talk about whatever, show patterns and what ifs. Okay, that's what they do. I actually do live trades. I actually look for like setups and I'll trade in front of you guys and I'll take a trade and then I'll show you if I make profit or if I lose a trade. But we don't lose over here, and if we lose, it's very rare. But we do lose, but we don't lose too often. I'm not gonna talk like I win every single trade because that's just not it. That's not true. I take losses too, but I don't lose too often. I'll say that. I make sure that I don't lose too much. I'm like, we ain't about to take this L today. We're not about to. Ever watched Crypto Face? He is one. I'll watch a. Is he entertaining? If he's entertaining, I might give him a shot. Because sometimes I'm like, man, I don't know. Some people are boring to watch. A lot of traders are actually boring to watch, actually. But yeah, we have 7 minutes for this candle, 7 minutes and 35 seconds for this candle to close. I'm really getting confident that this market made short right now. We got bearish divergence. We're at the 4-hour key, June. We see a lot of rejection here. Man, I'm very tempted to jump in right now. Excuse me. Let me see. The next target, if you're trading pure Ichimoku, the next target would be the cloud. After the market hits the cloud, you might take profit here. If it breaks below the cloud, then you'll look underneath the cloud. Most likely, a market will probably move up, then retest something and move down if that's the case. And if it continues lower, you just hit a huge trade. So I'm thinking we're about to start moving down right now. So I'm just waiting. Mike, you said I like watching live streams when I'm doing chores and stuff as a background. Yeah, I don't blame you. Yeah, I don't blame you at all because sometimes when you're doing chores, you just got to keep yourself busy. You said give him a shot. He can get wild, but he drops plenty of MMA. Plenty of MMA like martial art, mixed martial arts. Oh, I might check out his channel just because of that. Because I'm a big fan of MMA. I used to do MMA, so that's why I'm a huge fan. Who's that? Ooh. Okay, I'm gonna have to check that later. Okay, let's see. Yeah, I'll give him a shot. I'll check him out. We got 5 minutes for this candle to close. It looks like it's gonna close bearish too, so we might take this short. I'm gonna keep the stop loss really tight though for this one. So if you want to jump in on this trade in the next 5 minutes, if it closes strong like this, let me check the Williams. Williams is not strong though. That's the only thing I don't like. But you do have decreasing volume though, which is giving me go for it vibes. So I want to see how this closes first before I consider. I really am considering getting short on this trade. Yeah, he talks UFC. He sponsors some fighters. What? Really? Dang. Okay, I definitely might have to check him out. He might have to sponsor me. I want to get back into fighting. Honestly, like I'm very passionate about martial arts, so hey, I might reach out. Hey, sponsor me, for real though. You said, but he doesn't sugarcoat it how it is. Okay, you know I don't sugarcoat nothing either. It is what it is. I like that attitude. We don't like sugarcoaters. We like real deal. We like to keep it 100. Let me see. Let me see. Okay, I got a message here. What y'all think about Jake Paul? I keep hearing about this Jake Paul kid. I could get on YouTube and I'll see Jake Paul. I'm just looking at something right now on Jake Paul. That's so funny. Yeah, so wow. Yeah, what do y'all think about that kid Jake Paul? Y'all think he has a chance in this fight coming up that he has next month? I think he's gonna get knocked out. I really do think he's gonna get knocked out. You said 5 minute has death cross? Let's see. You're right, 5 minute Ooh. You know what? If you're basing it off the 5 minute time frame, you could actually go short now. Look. The strategy that I taught y'all today is happening right now. You said he's entertaining. He's a doofus if we're being real. But he is entertaining. But look, right there, this is a candle. It crossed underneath the red line. Bam, look what happened. William Percent has momentum. You know what? I think I'm going to go for this because I'm liking this. Hold on, let me turn this on real quick. Oh no, what happened? Okay. Hey, I'm about to take a short. How much am I going to risk for this though? You said, but it might end if he gets knocked out. Oh yeah, it's definitely going to end if he gets knocked out. For sure. His career will be done if he gets knocked out. I think he is going to get knocked out in this fight coming up. I really believe he's going to get hurt. Because he's fighting someone with 100 amateur fights, That's a lot of experience. Oh dang, this is coming down. Let me go ahead and short this. I'm gonna enter. I'm gonna enter. Ooh, that's too big. Let's see. Let's go right there. All right, so I have put in 5 trading positions on this one. All right. All right, so we're gonna hope for the best and see how this works out. So yeah, I just put in 5 positions. If it goes well, I'm gonna be happy. You said entry at 20 to 12 would be triggered. Yeah, actually, it just got triggered. Yeah, it just got triggered. You know, I'm gonna go for this one. I think this is gonna be a good trade. I really do. And even on this 15-minute time frame, it's showing that the momentum's starting to pick up. Got 1 minute for this candle to close. William percent R is not all the way down yet, but I still like this based off the 5 minute, and then this 15-minute time frame looks good as well. First intake profit would be somewhere here, so I would look for something like this, something like this. Keep that stop loss tight. I might base the stop loss on the 5 minute. Let me do that. Let's go to 5. So yeah, I would put the stop loss somewhere up here. Keep that tight. There we go. All right, Lord, let's see if we have a good trade today. But yeah, either way, I think this is going to be a good trade. It might take a minute because if you're basing it on the 4-hour time frame, we still got a lot of time left on here. But I do think this is going to be a solid trade, though. I really do. So yeah, if you want to short this with me, go ahead. I just put in 5 positions. I think this is going to be a good trade. Let me see. Boom, boom. All right. Momentum, and we ain't got the momentum there, but we get in there. We get in there. If this does a crossover on the 15-minute time frame, oh yeah, this is gonna be a good market to short. Got a good position too. Sellers are coming in here, flat. Oh yeah, I think this is good. I think we're gonna have a winner. So y'all let me know if y'all win this. Make sure you just use good risk management. I'm not going to tell you how much to risk. You risk what you are willing to lose or gain. But that being said, if y'all enjoyed this stream, once again, smash that like button. It helps the YouTube algorithm. It helps my channel get recognized. Also, subscribe if you also enjoyed the content. If you want to be a member or a student, get access to VIP trades, join and be a member. If you want to be a legendary member, you could be a legendary member. Get one-on-one training with me and one-on-one access. And hey, do some big things because I want to see y'all win. I think one of my big goals is to help at least 10 people become 6-figure traders or more, or at least quit their 9 to 5. You know, if you work a 9 to 5, I want to help at least 10 people quit their 9 to 5. That's my biggest goal for this year. He said 30-minute bearish divergence confirmed to add to trade. Perfect. That works. Hey, let's do it. I'm for it. Let's go. Let's go. I am for it. But other than that, you guys, if you guys are like I said, I always appreciate you guys joining this live stream. If you ever want to reach out, take some trades, learn how to trade, be a member, join, watch the live streams because I'm also put out content as well. So definitely be tuning in for more. I'm definitely gonna give you guys more and help you guys increase your probability on trading. All right. That being said, if you That being said, just subscribe, show some love. I will see y'all tomorrow. I won't be doing a educational video or a trading video. What I will be doing, I'll be talking about. Actually, I'll surprise y'all. I'll do that. So tune in tomorrow. If I'm not on here tomorrow, it'll probably be Sunday. I'm gonna be hanging out with family on Friday, and I might. I'll just keep y'all posted. If you're subscribed, you'll know. If you're in the Discord, you'll know. I'll post it in there. But other than that, I appreciate you guys joining the stream. I love you guys. I'll be praying for you guys. Be praying for me. Your boy be going through some stuff, but definitely show some love. And I will see you guys in the next video or live. Peace.